Hello everyone, good evening to all. Welcome to Halson Academy. This is CS Sai Kumar. So this video is about Ind AS 103 important questions, guys. This questions is very important for our exam. If you know all these questions, if you solve all these questions, definitely you can attempt any question in our exam. Okay, damn sure, guys, damn sure. So please follow this class. So this is very important. So from our marathon book, first of all, I'll discuss the questions. So I don't want to discuss this question number 1 because already discussed in marathon part 2. So question number 2 also important, but I don't want to discuss. That's a basic question only. I want to cover only big questions, guys. Big questions. Okay, question number 2 is about step up acquisition. So please go through that. Yeah. Coming to question number 3. So this is the basic question. If you solve this question, you can solve the basic business combination question. So we have different types of questions like a common control transaction, okay, like a demerger, okay. Next, reverse acquisition. We have different types. So I'm not talking about all this bloody stuff. Just I'm talking about just a normal business combination question. Okay. So the summarized balance sheet is given. So here Satellite Limited, Planet Limited we have. Okay. So they have given the information, other equity borrowings, current assets investments, current assets and contingent liabilities. So guys, as per Ind AS 32, okay, so contingent liability also should be considered as a liability, guys. So please remember this point. Okay, that point is very important. So okay. Next, coming to question. Market price of equity shares of a Planet Limited and Satellite is 16 and 15 respectively on the day. On the basis of above data, you can require to make necessary accounting for the following cases. What is that? Planet Limited take over Satellite Limited. Who take over, guys? Planet Limited take over Satellite Limited. Okay. And purchase consideration settle issue of 10,50,000 shares. How many shares? 10,50,000 shares issued by who issued, guys? Planet Limited, because Planet Limited take over the Satellite Limited. So Planet Limited issuing how much? 10,50,000 shares. Past journalists in the books of both the companies they're asking. See, guys, just can you please tell me? See, in the given question, Planet Limited is acquiring Satellite Limited, right? So who is the acquirer, guys? Who is the acquirer? So Planet Limited is acquiring, right? So Planet Limited is the acquirer. Next, Satellite Limited is nothing but acquiree. Yes, that's okay. Everyone knows about it. The market price of a Planet Limited is 16 given in the question. Market price of a Satellite Limited is 15 rupees given in the question. And Planet Limited take overing the Satellite Limited. For that purpose, Planet Limited issuing 10,50,000 shares to Satellite Limited. That's it. Clear? So this is the basic question. Okay, now just blindly go through the steps, guys. What is the step number 1? What is the step number 1? Please tell me. Acquirer. Who is the acquirer here? Yes, Planet Limited. Yes, that is directly given in the question. Next, step number 2, acquisition date. What is the date of acquisition? So that is given in the question already. The date is given in the question or not? So which means on 1st April 2021 they have acquired simply. Yes, the question is nothing is saying, right? So that's why 1/4/2021 is the acquisition date. That's okay. Okay, so they're saying simply acquired, which means 100%. Yes, that's okay. Very good. Next, step number 3. What is the step number 3, guys? Purchase consideration. So purchase consideration we can easily calculate. So they are issuing a 10,50,000 shares, right? Yes or no? See, guys. So step number 1, Planet Limited. Step number 2, 1/4/2021. Step number 3, purchase consideration. Yes. What is the purchase consideration in this case? So Planet Limited issuing 10,50,000 shares to whom, sir? Satellite Limited. Correct or not? Yes. In this question, you need to remember one thing, guys. So many of the students are doing this mistake. Like the question is given in thousands. Here the question is given in thousands, and sometimes but see, in the given question 10,50,000 shares is given. So in this case, please don't confuse, guys. If you're taking the solution as all rupees in thousands, then you need to you need to convert this 10 lakh 50 also to thousands, which means 1050 thousands. Correct? 1050 thousands. Correct or not? So which means 1050. So this is the mistake the students are doing. Please remember this. Please remember this. If the question is given in rupees in thousands or hundreds or 1 lakhs or a crores, please identify, guys. Please identify. Then only you can solve this. Okay, if you forgot about that, then it will be gone. Definitely. So please remember that point, guys. Please remember. Again. I'm saying please remember. That's it. Okay. So how many shares? 10 lakh 50,000 shares, which means 1050 shares. Yes. Who is issuing, guys? Planet Limited issuing to Satellite Limited. Okay. Correct. See, how many shares are also given in the question? How many shares? 10 lakh 50,000 shares. Yes. Sir, basically, please use your common sense. Sir, I am the Planet Limited. You are the Satellite Limited. I am issuing shares. I am issuing shares. Based on whose market price? That is the question. That is the question I am asking. Whose market price I am issuing the shares? Can you please tell me? Please tell me. Anyone, please tell me. See, guys, I am issuing the shares. Yes, sir. No, I means Planet Limited issuing the shares. So, which means based on Planet market price only, they will issue the shares. Correct or not? Yes or no? No, I cannot issue shares based on your market price. I can issue based on my market price. Correct or not? Yes, my market price means Planet market price. What is the Planet market price, guys? 16 rupees. Okay, 10 lakh 50. Nothing but 1050 into 16. How much? 16,800. That is the purchase consideration, guys. That is the purchase consideration. So please remember, guys. Please remember. Just common sense. Are you able to understand or not? So please use your common sense. That's it. I am issuing the shares based on whose market price? Satellite or Planet? So nothing but my market price. Based on my market price only, I will issue the shares. Not on your market price. Correct or not? Your market price is 15 only. My market price is 16. So what is the purchase consideration here? 1050 into 16. My market price, nothing but Planet Limited. How much? 16. So total 16,800. See, in the given question, the face value of the share is 10 rupees. The market price is 16 rupees, which means that balance is 6 rupees is nothing but securities premium. Correct or not? Yes. So that's why I segregated that. So equity share capital equal to 1050 into 10 rupees, 1050 into 6 rupees. That's it. So equity share capital, securities premium. Is that clear? This is the purchase consideration calculation. Simple, guys. Very simple. In this question, directly shares is given, guys. Okay. Understood or not? Yes. Next. Right. Okay. So clear. So this is completely about purchase consideration. Clear, guys? Next, coming to step number 4. There is no non-controlling interest in this case. Correct or not? Because they are simply saying the takeover, which means assume that it is 100%. Okay. Clear. Next. Step number 5. Calculation of fair value of net assets on. Fair value of net assets on acquisition date. Whose net assets, guys? Step number 5. Acquiring net assets. Who is acquiring here? Satellite Limited. So you need to calculate the net assets of Satellite Limited. Correct or not? Yes. See, go to question. So you need to calculate the net assets. Nothing but total assets minus outside liabilities. So what are the total assets here, guys? PP satellite means first or second? First one only. Yes. PP. See, guys, please try to understand. In the given question, they have given the balance sheet value as well as fair value. Which value we need to consider? Please tell me. Balance sheet book value or fair value? Fair value. Please remember, guys, fair value of net assets of Satellite Limited on acquisition date. Acquisition date. Today Planet Limited is acquiring, right? So they are acquiring based on the fair values on this date only. Whose fair values? Acquiring fair values. So if the fair value is available in the question, so please take the fair value. If the fair value is not available in the question, then you can take the book value. In this question, they have given separate column for fair values. Just you can take it. PPE 10,000, investment property. Next, investments we don't have any fair value. So then in this case, you can take the book value directly. So current assets we also have what is that? Fair value. Correct or not? Yes. See guys. PPA 10,000, investment property, investments, current assets. So these are all the assets. Correct or not? Current assets how much? 3,200. So what is the total, guys? 21,200. This is the total assets. Okay. Minus outside liabilities. What is the liabilities here, guys? Borrowings, trade payables. Correct? Borrowings, trade payables. Borrowings, trade payables. The special point is borrowings, trade payables, and the special point is contingent liabilities. So this is important. So students, if you are following accounting standards, contingent liability should not be recognized and it should be shown as a footnote. Correct or not? So in this case, please don't do like that. So please treat as a liability only. Okay, it is specified in some other Ind AS 32 basically. Okay, understood or not? Yes. How much? 750. That is the fair value. That's it, guys. This is not the book value, this is the fair value. Clear or not? Clear. So then you will get what is that? Net assets, fair value of net assets on acquisition date. So please remember, guys, if the fair value is given in the question, please take the fair value. If the fair value is not available in the question, then take the book value. That's it. Is it clear? Yes. Okay. So step number 5 is completed. Step number 6, PC plus NCI minus net assets. NCI is not there. PC minus net assets. PC, what is the PC? 16,800. What is the net assets? 16,000. So balance 16,800 minus 6,000. Total 800 is the goodwill. If it is positive, goodwill. If it is negative, gain on bargain purchase. Correct or not? Yes. So this is already discussed in part 2 of marathon. Correct or not? Yes. I don't want to discuss all this stuff here. These are the 6 steps. Yes, we are done with all these steps. Then you can prepare the balance sheet. Okay, so easily you can prepare the balance sheet, guys. So just simple guys. This is the consolidated balance sheet after takeover. So here Planet Limited acquired Satellite Limited on 1/4/2021. On that date you need to prepare the consolidated balance sheet. Okay, so Ind AS 103 applicable here. See, simple guys. You are the Planet Limited, right? So in the given question, they will give, suppose example, in the given question, in this question, see, for Planet Limited, they have given only balance sheet date only. If they given fair value, which value you should take? Please tell me, book value or fair value? I'm asking about Planet acquirer. The book value. Don't go to fair value, guys. Fair value only for acquirer, not for acquirer. So please take the book values only. Okay. So coming to assets, how much? Book value 12,000 plus here fair value only. Guys, we already recognize, right? When we are calculating step number 5, we have taken only fair values, right? So you need to take fair values only. Correct or not? You validate fair value only, so you need to take fair value only. So acquirer company book value, acquiring company fair value. Acquiring company fair value is not available, then you can take the book value. That's it. In the similar way, 12,000 plus 10,000, 22,000 plus 7,000. How much? 8,000, 3,500, 1,000 only, because there is no fair value. Correct or not? Yes or no? So 4,500 plus 3,200. You can check here. 4,500 plus 3,200. So these are all the values. Acquirer company book value, acquiring company fair value. Acquiring company fair value is not available, then you can take the book value. Please don't take 0, guys. If it is available in book value, then you can take that. Okay, these are total assets. Next, the point is, the main point, when we are tallying the balance sheet, you will get one some difficulty you will face in this case only. That is the point. What is that? Other equity. So please don't get confused, guys. In case of equity share capital as well as other equity, please don't get confused. Just follow my words. That's it. Simple, guys. In case of equity share capital, please check the balance sheet given in the question. What is the equity of Planet Limited? What is the acquirer equity share capital, guys? What is the acquirer equity share capital? How much? That is 12,000. That is 12,000. Please take that. 12,000 plus whatever the shares, whatever the share capital you have issued to Satellite Limited, that only you need to consider. Don't take the balance sheet value of equity share capital given in the question, guys. Please don't take that. We already acquired that and we have paid some purchase consideration also, right? Yes sir, no, that is not a issued share capital. So you need to take equity share capital means issued share capital, correct or not? So we have already 12,000 and again we have issued 10,500, correct or not? So please go to step number 3. Step number 3, how much? 10,500 only, not 16,800. The balance 6,300 will goes to securities premium, other equity, correct or not? This is comes under other equity, not under equity share capital. Clear? So that's why this is the special point, guys. When we are solving the, when we are preparing the balance sheet, please mind it. So first of all, take the book value of a acquirer company plus fair value, nothing but whatever the shares you have issued to acquiring company. Share capital, how much share capital? 10,500 only, not 16,800. Out of 16,800, balance 6,300 is securities premium. So please don't consider any equity share capital. So please add it to, what is that? Other equity only, that's it. Okay, so and one more, in case of calculating other equity also, so please go to question. What is other equity of a acquirer company? Please calculate, please check that. How much? 4,000. This is the acquirer other equity plus 4,000 plus newly created other equity. Nothing but what is the additional reserves we have created till now? What is only one and only securities premium? Is there any capital reserve we have? Is there any capital reserve? There is no capital reserve, guys. In this question we have only goodwill only. In this question we have goodwill only. So please consider that goodwill, guys. Don't forget about it. So I forgot that. So please don't forget about that goodwill. If it is goodwill, please consider it in assets only. If it is the capital reserve, then please consider in other equity. That's it. So we have only securities premium. So that's why 4,000 plus 6,300, total 10,300. That's it. Very simple, guys. So please don't forget about step number 6. That may be goodwill or capital reserve. If it is goodwill, comes under assets. If it is capital reserve, please add it to other equity in liability side. That's it. Okay, so coming to borrowings and trade payables. Borrowings and trade payables. What are the borrowings here? See, this is the borrowing 3,000 for acquirer company plus fair value of acquiring company. How much? 2050. 5050 total. Correct? 5050. That's it. Simple, guys. Other liabilities, outside liabilities and total assets easily you can calculate. But only in case of equity share capital and other equity, you need to be very careful. That's it. Okay. So in this case, we have a contingent liability also. Please don't forget about that, guys. So how much contingent liability? So contingent liability, how much, guys? 750. Okay. So then you will get tallied. The tally. We can tally. That's it. This is the proper way for calculating, for solving the question. Okay, so this is business combination basic question, guys. This is the basic question. Easily you can solve. In this question, NCA also not there. Okay, so I think if it is NCA is there, then we can easily calculate the goodwill or capital reserve. We can easily calculate. Correct or not? Yes. Right. Next. Okay, so if NCA value is there, then you can show here. You can show after other equity, you can show the NCA balance if it is there. In this question, there is no NCA. Okay, so this is the basic question, guys. Okay, that's it. Next, coming to question number 2. In question number 2, we have covered. See, guys, one more point in this. In this question, they're asking about journal entries in the books of both the companies. Okay, both the companies they are asking, which means acquirer company as well as acquiree. So first, one more point I am saying, this Ind AS 103 will be applied to acquirer only, not acquiree. So please remember this point. Ind AS 103 applied to only acquirer, not acquiree. Then for acquiree, just a basic accounting is required. That's it. Basic accounting. Just you need to close the books of acquiree, right? So that is the basic accounting. Ind AS 103 is not applied to acquiree. So please remember that. Okay. Basically, if in case of MCQ important, we are following acquisition method. We can say it's an acquisition method. Ind AS 103. Okay. Yes. Coming to entries in the books of Satellite Limited, I'm not going to discuss any entries regarding Planet Limited, which means acquirer. So easily you can write all the entries. Okay, that is discussed in previous marathon part 2 also, right? So that is not required also. Yes, you can write the entries easily. You can write all the entries. That is the basic entries in case of acquirer. But you did not learn about this acquiree accounting, right? Acquiree accounting, which means, see, journal entries, nothing but. See guys, in case in the books of Satellite Limited, they're asking the journal entries, right? Which means simple guys, I am Planet Limited, I'm acquiring Satellite Limited. So I need to first of all, I am Satellite Limited. So I assume that if I am Satellite Limited, I need to close my books. That's it. Okay, when we are closing our assets and all assets and liabilities, simply we will transfer to some realization account. What is that account? Realization account. Okay, at which value guys? At which value means at book values only. Simple guys, I need to close my balance sheet, which means I need to close my balance sheet values only, nothing but book values. So go to question. Okay, I need to close my book values only. What is the book value in case of Satellite Limited? 9,000, 5,000, 1,000, 3,500. All these are book values. Yes, I need to close that by transferring to realization account. Okay, simple guys. Closing of a books of Satellite Limited means closing the balance sheet. That's it. So balance sheet means balance sheet values only, book values. So what is the entry? Relation to PPE, to investment property, to investments, to current assets, all assets. Just I am closing by transferring to realization account. Similarly, liabilities also. Okay. So what are the liabilities we have? What are the liabilities, guys? Trade payables and borrowings. How much book value is 2,000, 2,500. Correct? 2,000, 2,500. To realization account. How much? 4,500. 4,500. Understood or not? Yes or no, guys? Yes. Next, one more point, guys. In this case, third entry. Basically, third entry is purchase consideration entry, guys. What is entry? Purchase consideration entry. So nothing but I'm receiving equity shares in Planet Limited, right? I need to receive from Planet Limited. So that's why it's an asset receivable. So equity shares in Planet Limited account debit to realization account. That also should be transferred to realization. So that's a separate entry, but I have written in a single entry only. So please don't get confused. Just first I need to close my all assets. I need to close my all liabilities and then purchase consideration entry. So what I'm getting here, equity shares in Planet Limited. So I need to receive equity shares in Planet Limited to realization account. That's it. Okay, clear or not? Yes. Next, entry number 4. What is the entry, guys? Simple, guys. Just I want to discuss. I don't want to discuss the question here. I want to discuss the concept. This is the balance sheet. Fixed assets, current assets. Okay. Next, other liabilities. Long-term liabilities, equity share capital, other equity. Okay, so first of all, simple guys, this is the Satellite Limited. Assume that. So I want to close my books because it is no more not at all in existing. Correct or not? Completely take over by Planet Limited, so it is not existing. So that's why I need to close my balance sheet. That's it. I need to close my books, which means I need to close my balance sheet. So balance sheet means only book value is only available, right? So please close all the assets by transferring to realization account. Next, please try to close all other liabilities, outside liabilities, by transferring to realization account. And for all this purpose, I'm getting some purchase consideration from Planet Limited. What is that? In the form of equity shares, right? So equity share capital in equity shares in Planet Limited to realization account only. Realization account. Okay. Next, what is the pending in the balance sheet? Still equity share capital and other equity. So simply please transfer this equity share capital and other equity to equity shareholders. Okay, and then settle them, and then settle to them. Simple. Correct or not? Yes. See, that's why first of all I'm transferring to equity share capital 8,000, other equity 6,000, to equity share capital 14,000. How much? 8,000, 6,000 only, right? 8,000, 6,000. Correct or not? Yes, 8,000, 6,000. Total 14,000 transferred to equity shareholder account. Equity shareholder account. Now, if you see what is the equity shareholder account balance here, total balance. Next, see, one more point is there. Yeah. See, guys, once you have prepared, I think this concept, everything you have learned in CM inter level, right? CM inter level realization, resolution of partnership, right? In the same way, we have calculated here also. Okay, so in this see here relation balance is debit balance 18,500, next credit balance 21,300. Nothing but credit balance is more than debit balance, right? What is the difference here? The difference is nothing but relation profit or a loss. That entry also you need to be right. So actually these all these entries I need to discuss previously only, but I am discussing along with the question. So please don't get confused. First close the assets, next close the liabilities, and then calculate the profit, relation profit or a loss. Okay, sorry, before calculating profit or loss, please check that purchase consideration entry also. Yes, third entry is purchase consideration, and fourth one is relation expenses. If there is any relation expenses, yes, you need to write entry for that also. Okay, if there is any relation expenses, yes, you need to write entry for that also. Okay, after that, please calculate the relation profit or loss. That should be transferred to equity shareholders only. So that's why I have transferred 2,800 to equity shareholders. After that, you please check the balance sheet. Is there any equity share capital and other equity? Yes, both. Please transfer to equity shareholders only. And later, please check the total equity shareholders balance. Here 2,800, here 14,000, total 16,800. 16,800. What is that? That's the PC amount only, right? So simply equity shareholders account debit to equity shares in Planet Limited 16,800. That's it. Close. Understood or not? First of all, I'm writing the due entry for purchase consideration, right? What is entry here? Equity shares in Planet Limited to realization account. Correct or not? Equity shares in Planet Limited to realization, which means I need to receive from Planet Limited. Okay, once after completion, once after closing all the books, that needs to be given to equity shareholders only. That's why equity shareholders to equity shares in Planet Limited. That's it. So all accounts will get closed. All accounts will get closed here. This is the entries in the books of Acquire. So please don't forget. This is more than enough, guys. This is more than enough. Yes, I have covered 2 books now, as of now. Acquire books as well as Acquire books. Acquire as well as Acquire books. It's a basic calculation. That's it. Okay. Yes. Now I want to discuss about the common control transaction. Okay. What is it? Common control transaction. Yes, I think it's almost half an hour, so that's why I will release the new video. So please keep it in 2 speed, guys. Please keep it in 2 speed, and then please listen. Just you will complete within 15 minutes. You will get a full clarity about this subject. Okay, thank you so much.